Hello and a very warm welcome back. There are a series of world events in the calendar which I think have the potential to converge on one another and make the next couple of weeks very, very exciting for crypto holders and potentially for people who want to get into the market as well. Let's jump into it right now and break it all down for you. So Bitcoin currently at the time of recording sitting at a price of $62,700. We're bounced up from lows put in late on Sunday at $62,000, but we are still holding in this range between about $62,000 and $63,500. Now, this is important from a technical perspective because it means we are just shy of this high here at $64,500, and a break of that high would signal a break of the technical downtrend that we have been in since the highs put in on the 27th of September. We could see that the move up towards the end of last week was perpetuated by spot buying. The move was steady, but more gradual than previous moves that we've seen, particularly to the downside like this one, which was essentially precipitated by leverage long positions becoming liquidated. But this move to the upside, although relentless buying, was slower. And we can also see that reflected in the on-chain data, which tells us that around 1.5 million Bitcoin has been accumulated by whales, that is wallet addresses holding more than 1,000 Bitcoin. And that is a trend that has been going on over the last 6 months and intensifying lately. Why is spot buying a good thing for markets? Well, it's good because it means that price is likely to be more sustainable, or that demand is likely to be more sustainable. That is because anyone holding a spot position can't become liquidated like they can when they are holding a leverage long position. That means that they can't be essentially forced to sell based on a small market movement, and that means that their positions are hardier. They're more likely to hold on to that position and keep the Bitcoin, and therefore supply is suppressed because they're less likely to sell and let go of that trade, despite what the market may be doing in the short term. Now, much of this spot buying likely driven by macro tailwinds. As we know, S&P up to new all-time highs towards the end of last week, as PPI data kind of saved the day versus the CPI and core CPI data that we had out earlier in the week, essentially making it more likely that we're going to see the 25 basis point rate cut from the Fed, and less likely that we're not going to see any rate cut at all at the November meeting. So more likely to see that 25 basis point rate cut. And that is good for risk assets as a whole, because it means that, at least historically speaking, money tends to flow out of yield-bearing investments such as the bond market and into risk assets like equities, like crypto, because crypto is very much correlated with risk assets at the moment. Now, we also had an announcement on Saturday out of China about the potential for an upcoming stimulus package to help them hit their 5% economic expansion target for the end of the year. Now, we didn't get any specific details on the size of that stimulus package, although they suggested that it very much is still on the cards. Now, more data out of China yesterday as they had their PPI data out. China's deflation pressures deepened in September, with consumer prices rising at their slowest pace in the 3 months at 0.4% from a year earlier, while the producer price index, that is PPI, fell at the fastest pace in 6 months, down 2.8%. And the upshot of all of this is that it's even more likely that they are indeed going to stimulate the economy, and certain numbers that have been thrown around by analysts for this come anywhere up to above $1 trillion worth of yuan that they're going to inject into the economy. And as we know, any increased liquidity in the markets, at least in the short term, and that is a very important point, at least in the short term, is good for risk assets, making it good for the crypto markets as well. Now, looking back to the US, in just 22 days, we will have an election result. As you can see, Trump forecast to win with a 54% chance versus Harris at 45%. Trump, of course, being the pro-crypto candidate. He wants the US to become the crypto capital of the planet and the Bitcoin superpower of the world. Trump went one step further recently, doing arguably the unthinkable in supporting a crypto project himself. And that crypto project, called World Liberty Financial, will start its public token sale tomorrow on the 15th of October, which will be exactly 3 weeks before the presidential election. The project aims to raise $300 million from token sales at a valuation of $1.5 billion. So whether or not that is a success, a Trump win in the presidential election would be a massive win for crypto, and particularly bullish in the markets given how much suspense has been leading up to this. It is very much within the collective consciousness, you could say, that a Trump win would be bullish for crypto, and these things often tend to be self-fulfilling prophecies, in the sense that the market would view this as bullish simply because of all the excitement leading up to the election, and not necessarily because of the actual result on the industry of a Trump presidency. Of course, just 3 weeks left till we get that result in. Now, one more item that we might see resolution on much sooner, in fact in just 3 days, is a full moon. And as we know, as we've spoken about before, for whatever reason, full moons tend to be bullish on markets. You can see that here on the 19th, you can see that here on the 18th. Our next new moon will be on the 17th, in just 3 days from the time of recording. bullish again here on the 21st, and the opposite tends to be true for the new moons, as you can see here, here, and here. There's plenty of examples back through history. This is scarily accurate. Go and have a look yourselves. Pretty interesting stuff. I can't really explain it, but the pattern is definitely there, so worth taking a look at. And just another one of these events which seem to be converging to make the next couple of weeks very, very exciting for crypto markets. Now, of course, we should look at both sides of the argument. There is currently, although we got to where we are right now, in my opinion, because of spot buying, and there's clearly evidence on chain of a spot bid in the markets, right now there is still a lot of leverage in the market, and that is pretty balanced either way. So do bear in mind that a move in either direction could get overextended as either shorts become liquidated or as long positions become liquidated. Currently, market sentiment is sitting at neutral. And of course, we do still have tensions in the Middle East, any escalation of which would likely cause a slip to the downside. So in conclusion, it looks to be an exciting week ahead. Plenty of news events on the bullish side, and I believe they all have the potential to stack on one another. That could mean things are about to get very, very, very interesting in the crypto markets. As always, that is just my opinion, not financial advice. Thank you so much for watching. Plenty more to come. Bye.